This is Dissecting the Market. I'm James, and today we're looking at how individual investors like you and I have changed the market. Something has changed recently. In a world that was previously dominated by the elite, there has been a monumental rise of individual investors who are absolutely dominating the market in a way that we've never seen before, and this could be just the start. 2020, a year when coronavirus has swept through all of our lives and in many cases ruined their businesses and destroyed their livelihoods. For most, it has been a hard year. Some families have been unable to see each other and many have lost loved ones. But amongst all this, there has been a growing community of people who have been benefiting, a group who have made more money than they ever thought possible and who are changing the way our markets operate at an unprecedented level. Coronavirus has changed the world in more ways than you might realise. Not only has it devalued our economy and ruined our high streets, but it has also forced many people to be furloughed or work from home. With this, the world brought in a new wave of investors, young, with the power of the internet at their fingertips, with plenty of time on their hands to research individual stocks. Not only do they have the time, but they also have the technology to invest quickly and for free, using a new wave of free investment apps such as Robinhood and Webull. These new investors, although not as experienced, have done what the younger generation do. They use social media, but this time not to share pictures of their cat or the latest photo of some unknown celebrity, but instead stock pics and news articles, which are then scrutinised by the groups. Some of these groups have become so large they now compete and even dominate the larger investment firms, and are changing the market, and it's not set to change anytime soon. For years, people have considered stocks to be risky and the S&P 500 and other index funds to be safer and a better way to invest. This left the big investors free to pick the individual stocks and gave them somewhat of an edge over the smaller investors. However, the new generation of investors, now rivaling the buying power of the large investment companies, are able to move stock prices in a way unseen in recent times.
Now, I've spent the better part of this year studying the pandemic because I thought it really held the key to the market, at least for most of the professional money managers out there. And that was right. But you know what we've discovered? The professionals are no longer the only cohort that matters. We've got a massive group of individual investors who become, in many ways, a more powerful collective force than the professionals. And they simply don't care about the same things as the experts. And they're the ones who are the marginal buyers and sellers of stocks.
It all started with the announcement of lockdown and the crash in the market. Many businesses cut their ad spending, and we saw a rise in free trading apps advertising for anyone who searched YouTube for information on the stock market crash. And in came a new wave of investors who were keen to learn how to make extra money at home. With plenty of free time on their hands, these investors did extensive research on individual stocks. For big business, investments in corona-safe stocks like Amazon, Google and Walmart were their main plays, and whilst these safer stocks did increase substantially, this is absolutely nothing compared to the gains made by the thousands of individual investors who were more interested in buying low-cap pharmaceutical stocks, which were too small for many large investors to buy into. The communal effort to research into very small companies and buy en masse has been unprecedented in recent times, and it's forced the prices of these companies to skyrocket. With their newfound wealth, this growing group of individual investors turned their attention to Tesla, NIO, and many of the EV and green energy businesses. This new group of investors are not bound by the balance sheets and instead invest on speculation and emerging markets. Many of these younger investors understand the importance of these new technologies, such as electric cars and solar power, more than the traditional investor. Instead of these companies being valued on purely their balance sheets, now their future potential is more important than their current value. And this, in turn, has pushed up their share price, giving these businesses more money and enabling them to ramp up their production to meet these younger investors' expectations. A great example of this is a company such as NIO. Just a year ago, they were a little electric car company in financial trouble, facing bankruptcy. However, these shrewd investors had done so much digging that they soon realised it would be more than likely bailed out by the Chinese government, so they started investing. And as they made more and more from their pharmaceutical investments, they pumped more and more money into the companies such as NIO, pushing the price up over 2,000% in just a year. That would turn a $5,000 investment into $100,000, far outperforming the investments in the safer stocks such as Amazon and Google. And again, it gave NIO the funds it needed to start beating these targets and ramp up its production. So this new wave of investors are not only beating the money managers, but they are also helping the companies they pick and changing the world in more ways than anyone has noticed. They are literally shaping the future. What people often don't realise is these big investment firms operate like big business. They have rules and regulations to abide to, and they often can't invest in firms that are under $5 a share, purely because they're seen as too risky. On top of this, they're often buying millions of dollars worth of shares, which can often take weeks or months to buy and sell. This gives the individual investor more flexibility to buy and sell shares quickly and cheaply.
They only care about who's doing what's right and who's doing what's wrong. If they buy a stock that turns out wrong, they can always trade out of it for free because there are no commissions. They're not bound to anything. In other words, this pandemic has become the ultimate changing of the guard, but you might have missed it if you're not as plugged into what's happening with the younger generation.
The world of investment is changing fast. No longer do investors need to be in the exchange or have their money managed by big investment firms with costly management fees. Instead, more and more investors are turning to the free trading apps and following individual stocks, and this doesn't look to change anytime soon. It is possible at the end of lockdown, when people return to work, the interest in the stock market fades away. However, I think this change is set to stay. Investors have had their eyes open to the possibility of financial freedom like never before. With the internet at our fingertips, individual investors picking individual stocks seems like it's here to stay. What do you think of the rise of individual investors? Do you think they're here to stay? Let me know in the comments below. If you enjoyed this video, please consider giving it a like and subscribing to my channel. Thanks again for watching. I'll see you in the next video.